everyone, welcome to another episode of Weekly Market Recaps with Artie. If you're new to the channel, my name is Artie. I'm one of the moderators in our chat room. I mostly trade options, so if you're new, feel free to check out our community out and definitely subscribe to our channel. Wow, what a week. Today is Wednesday, March 23rd. We're recording this after really a strong week on Monday, Tuesday. Today we saw some kind of a weakness. So let's review market. Today, look at S&P 500. Started day out really weak. Sold out pretty much all day. Qs was the same story. A little bit of strength in an earlier part of the afternoon, but again weakness all the way. Dow the same story. Russell 2000 again same story. So majority of indexes kind of sold off, which was kind of expected today. We will review that. In terms of today, the stronger sector was energy, which was kind of expected. Energy pulled back a little bit, but again was really strong with the uncertainties there is with Russia and Ukraine. Utilities a little bit stronger. Seems like a little bit more risk off again is happening. And on a 1 week basis, of course, energy is still the strongest. So let's take a look at a little bit of a bigger picture. Look at daily SPY, look at Qs, and see what we're seeing. Very similar pattern we're seeing on a daily. So as you can see, we saw this was pretty much the day that the Fed made the announcement, and then after that, Jerome Powell said, a recession is very unlikely. So market loved that, and we had 1 day up, 2 day up, 3 days up. And then this doji that you see right over here, this indecisive doji, was when Powell was actually speaking, and he kind of didn't leave fast rate hike out of the table. He talked about maybe increasing the rates by even 50 basis point in their May 3rd meeting that they have, and market didn't really love that. And of course we went up again the next day, which was really surprising for me, because after that speech by Powell, I set up a bunch of bearish strategies, and yesterday was a tough day for me as a trader. But again, today we definitely pulled back. So you can kind of see today was a weaker day. Where are we heading end of the week? Maybe this way, or no, you think this is kind of a small pullback and the trend has completely changed and we're going upward? Yet to be seen, but this is kind of the scenarios that we're having. I'm going to give you some broader perspective on what I think is going to happen over the next few weeks in the market. So it'll be interesting. Let's go ahead and take a look at Qs. Technology, kind of the same story. Again, kind of the same story you're seeing. Let me bring it up over here and so I can show you. Very strong day. This was the Fed's meeting. 1 day, 2 day, 3 day, 4 day, really strong. This indecisive doji, and then today it seems like it's running out of steam and probably heading lower. That's what the chart is telling us. But we have to also look at the macro environment and see what the macro environment is telling us. Today I want to talk about 3 major reasons that I believe is going to act as a headwind on the market. It's going to push the market down in the short term, in the near future. One of them, of course, is rate hikes. So when you look at the next meeting that is on May 4th, the probability of a 50 basis point rate hike to bringing the interest rate to 1% is now almost 70%. That's a fast tightening cycle. And if you remember, we've talked about equity market do not like fast tightening cycle. So I even have a chart to show you. Let me bring that up. We've talked about this many times. When rate hike actually happens, equity market likes it. They usually go up. But when it's fast cycles, meaning the interest rate is going up aggressively, equity market usually sells off, and they do not like this. And we've seen it in 1968, we've seen it in 1980, we've seen it in 1994. So that's one of the worries that is happening. So this could definitely act as a headwind in the equity market. The second reason is, of course, what everyone's talking about is inflation. Inflation is extremely high. I mean, take a look at this inflation. You cannot make these up at around 8%. Around 8% over here, and this is United States, this was Canada. So majority of OECD countries are experiencing really high at the near like it's almost in the teens, right? Almost at 10% inflation, and there is no sign of it slowing down either, right? We're gonna have a food crisis because of the war, unfortunately. Commodity prices are going up extremely, and when you look at inflation expectation and inflation forecast, we're not seeing a lot of downward move. Again, this is kind of an expectation or forecast. Pretty much, we're still above the long-term 2.5%. By 2024, we're still going to be around the 3%, and this is pretty high. And this is something that, again, equity market will not like this. And the last reason, and this is something that everyone's talking about, but we've talked about it from the previous weeks, is the yield curve. We have flattening the yield curve. We have yield curve getting inverted. Again, past 7 recessions has been kind of predicted by an inverted yield curve. So every time we've had an inverted yield curve, the spread has kind of shrank. We've seen a recession. You can see it here. Went down, we saw a recession. Yield spread went down, we saw a recession. Over and over. So past 7 recessions has been correctly predicted by yield curve inversion. So what is happening here? Let's take a look. You can see this was the yield curve last year. Very steep. Look at the difference between the 2-year and look at the difference between the 10, almost 1%. Really, really steep yield curve. Take a look at it now. The 30 and 20 are already inverted, meaning the 20 is less than, the 30 is less than 20. Same story here with 20 and 10. And almost the same story here now with 2 and 10. So, as this yield curve gets flatter, almost going into that inversion shape, this is going to be bad for economy. This is going to be bad for the stock. Powell said the chance of recession is very low, but we saw Carl Icahn coming in on CNBC yesterday and talking about, actually the probability of a recession is really high. Maybe we could put a clip of that in this video so you can see for yourself. So this is going to act as another headwind, and I'm going to talk about the sectors and what sectors I'm betting on and what sectors I'm betting against. This is one of the other things that I'm looking at. So definitely take a look at this really, really quickly and really carefully. And of course, any kind of information in a macro environment and an overview that you need, you have the trading terminal to check out, and all these informations can be found here. Be patient with us. It's still in a beta version, but lots of really useful information here for traders. How the sectors are doing, how is VIX doing. Today was the first uptick day for VIX. We haven't seen that. How is the SKU doing? SKU went down today. We know that's not good. That's bad news for equities. So, something to look for. In the short term, I'm more bearish than bullish. All right, let's go ahead to the deck and see what we're seeing again in a big picture. One of the sectors that is going to be under pressure as we move forward is going to be real estate. So real estate has performed really well in the past few months. But again, as the rates are going to go up, I think we're going to see some kind of a compression and probably a breakdown for real estate in terms of their performance in compared to SPY. If you recall from last video, I talked about maybe shorting some residential REITs. I'm still doing research on it. As I come across some really great opportunities, I'm going to share it with you. But of course, this is something we're looking at. Another sector is financial. So, rates are going higher, but the yields is getting flatter, meaning the margins of financials are getting compressed because financials actually, they borrow in the short term and they lend in the long term. So as yield start compressing, that's their margin compressing. So that's not good news for them. And what you can see in terms of performance is you can clearly see kind of a triple top pattern for financials. Every time financial made a move, it went down lower. It tried going higher again, went down lower. Tried going higher again, went down lower. So this triple top pattern is because the yield curve, as we talked about, rather than looking like this, is starting to look something like this. And then maybe in the near future, it will look something like this, fully inverted yield curve. And this is bad news for financials. So something to pay attention to definitely as a trader. So if you're trading financials, be a little bit more careful, be a little bit more short bias. It's gonna help you in the long run. What else we got? Let's go to the next sector. Discretionary. Really a strong week for discretionary. As you know, I'm shorting this sector, so it's been a tough week for me, but I'm not worried at all because as you can see, every time discretionary has kind of made a move, it has followed lower. Every time it has made a move, it has followed lower. And I feel like we're gonna see again underperformance from this sector. Consumers are under pressure, prices are rising, inflation is really high. So I don't believe that this sector is going to outperform. So I'm pretty confident in the trade that I've set up since last week. And then consumer staple, you know, on a way up, but this week was a kind of a bad week for them. But again, I expect more strength from consumer staple in compared to S&P 500 as a whole. And then the last thing is, of course, the price of lumber. So lumber to gold ratio, so comparing lumber and gold, you can see that lumber is kind of collapsing in compared to gold. And this is definitely bad news for the economy because housing is a leading indicator of economy. A lot of people own places, so if their housing prices comes down, that means their wealth is coming down. So this is also one of the indicators that I love to pay close attention to. So with all that being said, how did I set my trades up? So again, looking at all this stuff, I'm still in that relative trade that I told you, which is long utility, healthcare, and staples, and short consumer discretionary. I have a butterfly trade on FedEx and a bunch of bear calls, and these are mostly, this is going to be, I mean, of course we got a squeeze here, so this is definitely going to lose me some money, but that's okay. And a bunch of bear calls on Amazon, on Qs, on DocQ, kind of expecting that the market is going to pull back. And then the last trade is betting on high yield bonds. So I'm kind of betting that the G spread, which is the spread between a corporate bond, junk bond versus a government, is going to increase. So also running an 81.50.79 bearish call on junk bond and high yield corporate bonds. So this is kind of the week. A lot of stuff is happening. Very interesting. What do you think? What are you trading? What do you see out of this market? Is inflation going to come down? Is the rally going to continue, or we're down for another 5%, 10% pullback? Definitely let me know, comments in the comment section, and until next one. Thank you.